The last sort of concept here is, so when we talk about financial accounting, we're talking about ways to communicate financial information to people who are not the big users of it, okay? Just people who need a summary of it, the owner of the business, the managers. They're not financial experts a lot of times, but they do need some summary of what happened in the business. So after we've kept all of these transactions throughout the month, then what we're going to do is we're going to create statements. And there's 4 primary financial statements that we'll learn about in this course that we'll have to keep. The first is called the income statement. The income statement, this might be hard to see here. The income statement is a summary of a business's revenue and expenses. Revenue for this business was called fees earned. Then all of the expenses are listed, and at the bottom they have something called net income. Net income is how much your revenue was higher than your expenses, right? Or sometimes people call it your net profit. That's the money the business made after expenses. If you had more expenses than revenue, then you have what's called a net loss. It means you lost money during that period. And when we talk about periods, we mean a time period, okay? Sometimes you'll see an income statement for a monthly period or a quarterly period. A quarter is 3 months, or for an annual or yearly period. All right, the second statement that we'll learn about is called the Statement of Stockholders' Equity. It summarizes the changes in the stockholders' equity over the period. So in this case, it starts with, as the common stock, the retained earnings. We'll add in the net income, because remember that was our revenue minus our expenses that we got from here. And then we'll subtract out the dividends, and that'll give us the change. So what was our stockholders' equity at the beginning of the period, plus any money we earned through net income, minus any dividends we paid, will give us our equity at the end. The third is called the balance sheet. It summarizes our assets, our liabilities, and our stockholders' equity. And it's always in that order. And again, we'll learn more about it, so don't worry about having to memorize what all this means today. But you might, in a note, say, balance sheet has assets, liabilities, and equity. And remember, since we know that the fundamental accounting equation is assets equal liabilities plus equity, we know that the assets part has to equal the liabilities plus the equity part. This is sort of the summary, if you think about it, of that basic financial accounting equation. And then the last one is called the Statement of Cash Flows, which I'm not even going to give you an example of. We won't get deep into it yet, but it just summarizes how much cash came into the company and how much cash is going out.